Thanks for joining us. I think what we're going to have today in this panel is a very fun discussion over this topic that we have up here. We're trying to answer a provocative question, is decentralization dead and do institutions care? Before we start, just want to quickly introduce myself. My name is Kikko. I work for the Hedera Foundation on the business development side, focused on financial markets. And I just want to quickly do an introduction of the panels here. Joining me to the left for the audience is Grace Chao, North America Lead Markets Digital Assets at Citi. And we have Alex Devnew, Partner and Chief Operating Officer at Road Capital. And we have Logan Jastremski, Managing Partner at Frictionless Capital. And Danny Sursock, Partner, Head of AI Research and Investments at Archetype. I think this is a very timely topic as we just had a panel on stablecoins, and we have a lot of the traditional finance folks coming into the space via whether it's tokenization of securities, stablecoins, and the prominence of centralized protocols such as Hyperliquid. So let's just dive right in. Let's just answer the question, is decentralized dead? Do institutions care? Grace, do you want to kick it off?
Sure, happy to. And I will be upfront and say that I disagree with the premise of our panel topic. Decentralization is dead. It's not. I think all you have to do is kind of take a quick inventory of all the projects out there that are focused on decentralization, right? So you have all kinds of DeFi protocols, borrowing, lending protocols. You have exchanges, decentralized financial market infrastructures. You also have decentralized identity projects. I've encountered a decentralized key recovery project. There are folks working on the decentralization of the layer 2s. Just at this conference, I met a new layer 1 that's about to launch that is also very focused on decentralization. And I heard the founders say, decentralization is the North Star of our industry. So there's plenty, and there's obviously decentralized DePen, things like decentralized file storage and decentralized AI. And so that being said, however, decentralization can be somewhat of a murky concept, right? So it means different things to different people. You might be referring to the centralization of node locations, cloud providers, client software. People also refer to that as distributed. Other meanings of decentralization could be decentralization of governance, voting power, or decentralization of ownership, or decentralization of user base, right? So there's a lot of different kind of layers to this concept. You got to be really precise when you're talking about it on what component, what aspect of decentralization do you mean. If I had to boil it down to its essence, I would say decentralization is the property of having no single point of failure or attack. And that could be as straightforward as, you don't have a single central actor in control of the activity. You have independent actors. But it could also mean that even if you have independent actors, if they all, say, run the same software that has the same bug, you still have centralization risk. And so, it's a concept with a lot of layers, but yeah. So let me just stage there. Yeah.
Yeah. No, I think in general, I think decentralization is something that is more like a pendulum than whether it's dead or something that's very central to a project. I think sort of saying the quiet part out loud is like in crypto, we need more usable applications, whether it's for retail users or for institutions itself, and I think. With that we've started to see more projects that are a bit more centralized, and I think that's part of the pendulum swinging back to let's find some stuff that's usable from a lot of different avenues, whether that's in trade order books or whether it's in user applications. But I do think that the pendulum will swing back ultimately when these things get bigger and they get more users. Decentralization will probably no longer be taking a back seat and will be something that's probably more important to users, and especially we know it's something the regulators are going to look at as well.
Yeah, I think you can measure decentralization. You can measure it in the sense of like how many nodes exist in the network. Solana has today about 1,000. Ethereum has like 6,000 to 8,000. I think Bitcoin was like 10 to 12. And then you can also measure the liveness of like the stake. I'm not sure. It matters only in the sense that you build a better product. And I'm not sure most blockchains, I think more in the past, focus on decentralization for the sake of decentralization. I think that actually matters a lot less. I really don't think institutions today, if you say we're going to 2x Ethereum's node count, if that would really make them excited. I think what matters quite a bit now is just like, what are the products that people are actually going to use? And is decentralization a part of that into making a net better product? If it's not a net better product, I don't think people care. But it's very much today a focus on product. And I think we probably over-intellectualized what decentralization was and why people should care about it. And then we try to jam decentralization into everything, and that just made a bunch of shitty products. And so now I think it's more normalizing, is decentralization even important for their product, and would it actually make it better? If it's going to make it better, sure, include it. If it doesn't, like, rip it out, you don't need a blockchain.
Yeah, look, I think everyone on the panel has made fantastic points. At the end of the day, right, we have to be thoughtful about what decentralization is and where it comes into play. Are we talking about decentralized governance and control? Are we talking about decentralized ownership and value accrual in a more passive sense? Are we talking about decentralized network topology and participation in it? All of those can be super additive depending on where in the stack we're building things, from base layer blockchains all the way through to protocols and applications. What's important in institutions is things that are functional, reliable, scalable, that work. And so we need to be very thoughtful and opinionated about whenever we're introducing decentralization into that stack, doing so in a way that's additive and not an ideological hurdle that something has to compensate for, either because of token subsidies and returns or some other thing that just makes for a less performant product or piece of infrastructure relative to what you can find in the traditional Web 2 world.
Well, I just want to ask Logan on more around the institutional use cases. And as institutional folks are looking at this space, they're probably optimizing around, you know, how stable, how robust the technology is, how scalable it is, and how it can tap into new markets. I just wanted to kind of focus more on stablecoins, tokenized securities, and any other sort of institutional applications as it relates to decentralization as a feature. If you can kind of expand on that, if you don't mind.
Yeah. If you think about what exists today, you have banks around the world that don't talk to each other, and they do batch processing, call it like every 2 days. You have, and broadly, that's kind of what's happening with Venmo. Eventually, what you're going to have happen is these ledgers are going to start talking to each other, which is why you would use an Ethereum, a Solana blockchain, because what ultimately these heterogeneous banks or heterogeneous exchanges are doing is collapsing that into one single standard. And that standard is really propagating all the transactions that are being originated on the blockchain to all the other nodes into the network. And so you're kind of going from like T+2 or kind of 2 days settlement for either wires or transfers, just general settlement, down to eventually a couple hundred milliseconds. And it's, I think the interesting part of decentralization there and kind of why it's important is not so much the decentralization aspect, it's that everybody can kind of opt into the shared standard and that information can be propagated around the world. And you almost have like a global real-time database. I think if you try to over-intellectualize these things and say like, blockchains are the future of Web 2, like it's the metaverse, it's going to be gaming, like all of that turned out to be just wrong. Like what blockchains really are just like kind of the next iteration of finance where we're stringing these things together and almost making real-time settlement between all these heterogeneous standards by creating one shared standard, which is the blockchain. And so I think in that case, why decentralization matters is just because people around the world can opt into these systems.
I mean, it's a good point, right? I think decentralization is especially important when we're talking about the underpinning of the financial technology and world that, frankly, is not important to a lot of folks out there. It's efficiencies in the banking system. It's settlement between counterparties. It's like a lot of the stuff that, people would normally take for granted, and that's where decentralization is especially important. I think decentralization, the reason I think a lot of people are less focused on it now within the crypto world is that like just from a governance standpoint, it's probably not as important as it used to be, right? Like you think about DAOs as an example. There's no shortage of successful examples of DAOs, but by and large, the DAO idea didn't really work, right? It's like trying to manage a company with 1,000 different people, and everybody gets a vote on something. Like that's not a great way to run an organization or a project or a company, and I think. That's where you've seen decentralization pull back a bit, but I think that's probably a good thing.
Yeah, I think it's really use case dependent, right? Certain use cases can benefit more from decentralization than others. So again, this is it seems simple, right? It's one word, decentralization. Oh, it means you have more than one entity, right? But in fact, you have to inspect each use case. So if you're talking the use case of money, right? Decentralization, I mean, that is the core innovation of blockchain, of crypto. It was the monetary use case, and it adds a lot of value to, it creates a whole nother form of money that we weren't able to have before, right? But for other things, maybe like the ones you mentioned, or maybe for use cases such as post-trade processing, right? They're arguably like, do you need decentralization for something like that? And for entertainment, right? I heard on another panel earlier today, we're talking, well, if this is just all a game, whatever we're just in it for the fun, it doesn't matter if it's centralized or decentralized. Yeah.
Then you have anything to add there?
Yeah, maybe one other, which is just like framing a byproduct of decentralization in terms of permissionlessness and what that means for innovation. I do think like one shout out that we have to give to Ethereum is one of the reasons why crypto looks the way that it does today, having had ups and downs, but just an incredible amount of innovation over many years, is because the substrate in and of itself was an open, programmable computing system that people could design these new protocols and applications on top of. If Ethereum had come out, 10 odd years ago and looked like this consortium of private companies that still open sourced it, it wouldn't be anywhere near what it is today, the vibrant, different community that we're lucky to be a part of. And so even going forward, where decentralization might become more of a spectrum, I do think it's going to be very, very important to maintain some balance above which that permissionless nature continues to be the case. And if institutions come in and start productizing and privatizing blockchains to the extent that I think some of them want to, that has the byproduct downstream of killing a lot of that open experimentation and innovation that has made this such a fascinating, volatile, crazy industry for investors and institutions and retail and founders to play a role in and really get excited about.
I mean, if we look back to like the start of the industry, it was started by Bitcoin. And I think that decentralization ethos of Bitcoin carried a lot over to Ethereum, where they kept node requirements relatively small. They ran them on Raspberry Pis, which is like a $100 computer, and the bandwidth requirements were super tiny. And then as you kind of advance, what we've kind of seen the progression happen is these blockchains can still be fairly decentralized. They have a large number of nodes, a large quorum, but the actual hardware requirements are getting larger. You're going from these Raspberry Pis now to kind of more modern systems where they have many cores, 8 cores, 16 cores, 32 cores. And instead of the bandwidth requirements being less than dial-up internet as they were with Ethereum, now they're going to megabytes and then gigabytes and then ultimately private fiber lines. And so I think the transition is definitely not away from decentralization. It's just like, again, what is the product focus? And I think blockchains are truly ledgers. And the ledger aspect is only important that you can communicate my information that I want to send Danny $10 to the rest of the world. When you have co-location and TradFi today, the data centers and where the actual matching happen is in New Jersey. If I'm co-located with my hedge fund next to this data center in New Jersey, I really don't have to propagate a lot of information because I have a certain cable that's connected to the New York Stock Exchange. But when you have these global blockchains, The world is a big place, and that information has to be propagated around the world. And so you have real-world latency, but you also have to propagate more and more information. And so what we're starting to see is really getting away from like the money aspect of crypto. And now it's much more of the technology and finance, where you really need these big bandwidth lines. You have to have really gigabyte lines. You need multi-core machines. You need to do parallel processing. And that's really going to take our industry to the next step, because it allows application engineers to build more expressive products. In the early days of the internet, you really just had chat, and that's because dial-up internet couldn't really support things like YouTube. As you went from dial-up to broadband, you could be more expressive from the engineering side. And that's the exact same that's happening in the blockchain aspect, but it's more centered around trading and finance, because again, these things are just ledgers.
Yeah, and it's a good timing, right? As we have institutional folks coming into the space, and if we envision a world where we see tens of trillions of dollars of assets on chain, and payments globally done, multiple X of MasterCard, Visa, and American Express combined, we need infrastructure to be able to support that. I guess I want to ask the panelists, and Alex, you mentioned a really good point around how decentralization is on a pendulum. And Grace, you mentioned that you disagree with the statement that decentralization is dead. Where in the tech stack do you believe decentralization is critical to see that level of institutional adoption at scale, mass scale? And just a real small plug for Hedera here. The Hedera network is currently decentralized as well, but run by Fortune 500 companies, nonprofit organizations that are transparent, known parties that are governing the network every day. It's not the most decentralized network. However, the network is able to take on institutional enterprise grade level scale and speed at a very, very low cost. So I guess, to the panelists, where within the tech stack and within the workflows is decentralized critical for this level of adoption?
Yeah, I mean, I think it depends on the project, right? I think, when you go back and think about Bitcoin, right, it was built into the ethos of everything that was early stage, blockchain, Bitcoin, whatever it may be. And like, fast forward now, and you're starting to think about like, what are institutions really going to use? And they're not messing around with early stage protocols and projects that are just launching on mainnet. But I think as a founder, if you're building in the space, like in thinking about a tech stack, doesn't really matter what you're doing at seed or ideation, doesn't really matter what you're doing on a test net and beta, but you need to start thinking about, how is decentralization going to be a part of this project or product, whatever I'm building right now? And I think a lot of that has to do is like, what does the end user care about? And if you're truly targeting institutions, they're ultimately going to care about some level of decentralization in the future. There's a project out there today, M0, that's building a universal stablecoin platform. And it's sort of a good example when you think about decentralization, right? They're starting to get into growth mode right now, but they laid the building blocks of, thinking about their decentralization very early on. So like when you're building this type of a product that is, targeting at institutions and other people who are going to be using the network, you need to be very thoughtful about how you're building it. And like for them, that meant let's keep the governance closely held by investors and early users of the protocol. And to be able to participate and mint on this network and really be a true user, you need to be approved. And like, why does that matter? That sounds like it's the opposite of decentralization, but it matters for institutions whose gating issues are AML and KYC, and like you're not even going to have the ability to be used by those folks if you don't start to think through that stuff early. So it's not dead, it's still important, but it matters in so much of a later stage of a lot of these businesses, but it's certainly been fun to see how it's evolved. I think, I don't know, it's a good question. I know you guys are both also looking at early stage products, and Grace on the other side is, in the more institutional world. So interested to hear how you guys think about looking at early stage projects and where does that come into it?
I mean, you can literally measure decentralization. It's not a question mark. From an engineering standpoint, these things aren't black boxes. Should you have 10 nodes? Should it be 100, 1,000, 10,000? Bitcoin people will tell you 10,000. Ethereum will say they're more decentralized, which is true, than something like Solana. Like, it is a spectrum, so to speak, but at the end of the day, it's like, what product do you want? I think now we're starting to see a rise of some application-specific chains. Some of those are doing well, but I think the interesting part about blockchains more broadly is that coordination aspect. And so if you're a institution and you want to communicate with other people around the world, maybe all the institutions need their own boxes. Is that 10 institutions, 20, 1,000? That's really the true parameter. How many people do you want to connect in this? Because I think it's more of a coordination technology than anything else. Governance and all that other stuff is fine, but truly it's just like, these app chains I think are probably going to be less important than people think. It's going to be the more general purpose high throughput blockchains because people are opting into that standard and then they can receive the information in the network. It's kind of like intranets versus the internet, which was actually the much more important thing.
Yeah, I mean, just to jump in quickly too, is like, I think that's what's sort of fun and cool about blockchain is like that decentralization story hasn't changed. Like one of the most disruptive things about blockchain is decentralization of ownership and economics, and that can be applied to so many different things. So it's, right, we get pretty bogged down in the details of nodes and validators and where things are located, but yeah, a quick plug for a very, interesting and critical part for, everything we do in blockchain is that idea of decentralized ownership.
Yeah, okay, great. Do you want to add anything?
No, I was just going to stress the point that, again, it is so like project dependent, use case dependent. I would say for institutions, a lot of it isn't necessarily thinking about, oh, I want this level of decentralization. It's like, what is the business case? What is the benefit? What are the cost savings, right? So the operational efficiency element is a big point, right? With a shared ledger, oftentimes you eliminate redundancies, you eliminate the need for reconciliation among different ledgers. That's valuable. If you can cut steps in KYC because you have some sort of a decentralized identity solution, that's valuable. And then always it goes back to clients, right? So institutions are going to see if their clients want to be on chain, then institutions will need to meet them there, right? So it's, I mean, to the question of the panel, like our panel, how do institutions care? I think you judge whether they care by their actions, their activities. And, if you go by the headlines, you'll see that, banks, asset managers, they're getting involved in DeFi. They're getting involved in, in some cases, they have been moving from, private chains to public chains. This brings up a slightly different concept, which is being careful not to conflate decentralization with other concepts, very related, like permissionless or openness. They're very, very related, but they're not the same, right? So permissionless or permission assets, permission activities can occur on decentralized ledgers. And on the flip side, private chains can also be decentralized, even if they're closed systems. And again, so you have to look at the specific activity that you're trying to improve or optimize. And then you try to figure out which aspects of it do you really need it to be decentralized. Most often than not, it's like you said, it's on a spectrum, right? Parts of it might be decentralized, other parts might not be.
The cool part is you can talk with your engineering teams and just ask them how decentralized it is. There may be more finance people in here, but it's very quantifiable.
I want to pivot here. We've got a little over a minute left, and we can't have a panel without talking about AI in 2025. So let's talk about how crypto can solve a lot of the challenges that institutions are facing, or perhaps opportunities as it relates to AI implementation. And before I pass it off to you, Danny, again, another plug. The Hedera network is working to really provide solutions around verifiable compute and certifying AI agentic workflows. That's just one example of how decentralization can help with that. But I'm going to pass off to Danny here. What's your thoughts there?
Yeah, I mean, our view is crypto can play a pretty uniquely impactful role in the proliferation of AI, but I think as an industry, we pretty lazily bucket that impact under the guise of decentralization. When we think about what those areas of impact look like, it's around things like decentralizing exposure to AI as an investable asset class by building new markets on chain across the entire stack of AI. It's around building a competitive suite of infrastructure and tooling and models atop which open source AI can proliferate. And it's around enabling a new generation of killer apps. And ironically, across a lot of those areas, the unfair advantage that crypto brings to the table is much more around things like the composable nature of these applications, or around introducing novel coordination mechanisms that bring online different things of compute or capital or data or human contributions and whatnot. And decentralization is still relevant. I do want to make that point. It's just about being very thoughtful about where it comes into play. Are we talking about the next foundation model being developed on chain, but we're just decentralizing ownership and value accrual? Or are we talking about a data collection network selling into model companies or robotics companies, where we're just talking about a distributed supply side of people that are contributing and monetizing their data? It's a very nuanced take where decentralization in and of itself cannot be the core focus at the expense of things that are usable and scalable that institutions in the real world will adopt or invest in.
Yeah, that was. Does anyone want to add to that one?
I mean, to be a broken record, I think blockchains are ledgers, and so they're good at things like payments and trading. As they get more performance, they'll generally get better at things like price discovery. And then on the flip side, they're great for coordinating people. And so from the AI standpoint, it's kind of more of a coordination technology where you're able to facilitate more seamless transfers, payments. People can opt into a system because it's a shared standard. If you use a Ethereum of the world, you opt into the Ethereum network. As a byproduct, you say, I agree with the standards of that network. If you don't like that network, don't use that network. Use a Solana, use an L2. But you're explicitly agreeing to whatever that network, this kind of religion, so to speak. And so I think from the AI standpoint, it's very much of how can we help coordinate either getting data or latent compute into a certain network where it's more seamless to do that in a global manner than it would be by a country or country geographic region, but it's just helping on the coordination aspect. These are global ledgers, nothing else.
Well, thank you. We're going to get booted off stage soon, so thank you so much for joining us in this discussion. Have a good afternoon.